Well, welcome to episode 99 of Women on Wealth. I'm Julina Ogilvy, and today's guest is someone who speaks directly to a core belief of myself and my firm at Principal Wealth, and that's behavior drives results, especially when it comes to investing. And I've seen it time and time again through my career. Emotions, not just the markets and the economics, often dictate, financial outcomes. And that's why I'm thrilled to welcome Adam Sarhan, who is founder and CEO of 50 Park Investments. He's a regular contributor to Forbes and Zero Hedge. He's the host of the Smart Money Circle show and author of number one bestseller Psychological Analysis: How to Outsmart the Market One Trade at a Time. And he has an approach, what he calls psychological analysis, that challenges the traditional tools of technical and fundamental analysis that I think we learn in school. And he believes, as I do, that investors must understand not just the numbers, but the behavior behind them. So, Adam, welcome.
Thank you so much for having me. It's an absolute pleasure, and I look forward to the conversation.
I'm looking forward to this conversation. And I guess to start, can you tell us a little bit about your story and how you came into the business and why you're so passionate about this topic?
Sure. So I'm blessed or cursed, depending on how you want to look at it, with a curious mind. I've always had one since I was a kid. I started my first business in middle school selling candy before Costco was around to kids in school and all that other fun. I've always just been absolutely fascinated with humans and creating value. I didn't understand it at a young age, but I love the exchange. Somebody gives you value, you give them money, so on and so forth. And then as I grew older and older, I realized I have no idea what I'm doing. So I started trading. I mean, it's just a true story. I had no clue. So in high school, because I was fascinated with business, naturally the intrigue, if you will, moved to investing in finance. So
Mm.
I started trading stocks in high school as a teenager in the 90s, and then it was right before the dot-com, boom, and I realized I had no idea what was happening at the time. The irrational exuberance, which is a fancy word, Alan Greenspan, a former head of the Fed, said years ago,
Yeah.
decades ago now. Irrational exuberance is just a fancy way of saying that logic is thrown out the window and emotions have just taken over.
Mm.
And
Yep.
stocks were trading based on not fundamentals and not technicals. It was just bonkers. I mean, it
Mm.
wasn't even any, you were, it wasn't even like, hey, there's any modicum of knowledge or intelligence or reason. It was just the madness of the crowd, if you will, for
Hmm.
lack of a better word. So I said, all right, that was my first foray. It was in the mid 90s and late 90s. I wrote it all the way up and then all the way down. I was like, whoa, hold on a second here. This party ends. It's like a game of musical chairs. It's not just a one-way street up. So I said, okay, great. So I was young enough to know and humbled enough. I come from very humble beginnings. I know I don't know, so I have one job, and that's to learn. And that's been the story of
Hmm.
my life ever since. So I loved finance. I love investing. I didn't work at the big banks. I started my business in my dorm room in grad school. I realized education was what I needed, so I started going to school. And I didn't study finance, but I really fell in love with finance. And I said, all right, there's got to be a better way to do this. So after reading all the books out there and investing and attending seminars and traveling around the country, and at the time there were seminars, not webinars, but there was, in-person seminars in the late 90s and early 2000s, I realized, I said, okay, I'm walking into a room in New York, in Chicago, Miami, LA, DC, San Jose, California, LA, wherever you go, it's all over. It's the exact same thing. The faces change, the
Sure.
speaker changes, but the audience, the crowd, and I'm young now at this stage in my, early 20s and aware of enough to understand that even though the speakers change and the topics change and even the stocks du jour change, because in the 90s they were the dot coms, and then all of a
Absolutely.
sudden it was housing stocks, and then it was this. And I'm like, this is weird, but good. I want to figure it out. So I said, all right, fundamental technical analysis for the audience. Fundamental analysis is studying the company, like Warren Buffett, and
Hmm.
technicals is studying the stock. You can have a good stock, lousy company, and vice versa. So after reading everything under the sun, I realized they're kind of like two feuding religions or sports teams. There's something there. There's
Yes.
got to be more to this. Then I came across Bill O'Neill, who's the founder of Investors Business Daily. He came
Hmm.
up with this can slim investment approach. Each one of those is a different criteria. It sounds like a diet plan, but it's not. And he
Mhm.
combined both fundamental and technical analysis.
Mm.
And that's when the penny dropped in my mind. I was like, wow, this is actual genius because there's good in fundamental analysis and there's good in technical analysis.
Yeah.
Why not combine the two? Then I
Yes.
said, oh, great. So I read all his stuff. And my first job on Wall Street was working for a website called canslim.net. And
Mm.
that was the largest provider of the CanSlim research outside of Investors Business Daily at the time. This was the early 2000s. And I had applied it to all the big banks. They all said no. They basically said, how much money can you raise if we hire you tomorrow? I
Right.
said, nothing, but I'll work really hard. They're like, all right, come back when you can raise some money. So I said, all right, that's not going to work. So a young whippersnapper, I was reading books and attending seminars, and I'd really gotten very advanced in that Can Slim world. So my first job out of school, like, well, actually, I was still in school at the time, but my first job on Wall Street was working for CanSlim.net. Again, the largest independent provider of CanSlim research. So I interviewed, guy was giving a seminar at a local hotel down in Lauderdale. I was living in Boca at the time. I'd left
Mhm.
New York and went down to Florida in 99. And I went up to him and said, hey, do you have any, any advice on how someone can get started in this business? He goes, why don't you come in for an interview? My assistant just quit. I said, okay, great. Turns out his assistant was his ex-girlfriend. I didn't know that at the time. Went in Friday at noon. I ended up leaving, I kid you not, at midnight. We hit it
Wow.
off. It was white on rice. We're speaking the same language. For him, I was an angel from heaven. For me, he was an angel from heaven. It was just a great match. What happened? He interviewed me for 2 hours from noon until 2, and then he started writing the aftermarket report. I was like, hey, what are you doing? I'm just curious, right? That curious mind keeps coming back into
Yeah.
play.
Yeah.
And he's like, I'm working. Actually, we're staying in the office tonight, and I'm going to be ordering in. If you want to stay and hang out, you're more than help me to help some slides. I have a presentation in Chicago next week. I said, great. I couldn't believe somebody gave me the time of day type of a thing. So I said, all right, great. So then, anyway, I got licensed. I got my Series 7, my 24, my 63, all that stuff. And I realized that wasn't really for me. I moved over to the 65.
Okay.
Afterwards, IBD, Investors Business Daily, bought that website, shut it down, and then I went off on my own,
Mm.
still doing the fundamental and technicals and trying to do what everybody else is doing, hoping for different results.
Right.
Now, as we know, that's Einstein's definition of insanity, right? So I said,
Yes.
all right, I've got to go back to square one. So as I would go around the country, I started becoming a speaker and people started asking me about my canceling expertise. And I met Bill O'Neill, met his son Scott, and all that kind of fun stuff. And I became well known in that community and going around the country speaking at different events. So what happened was, and this was really what blew my mind, was people were asking identical questions in
Mm.
all of the big cities I'd speak to.
Hmm.
So it's kind of like when you go into a crowded theater, yell fire, you get the same results. People run. No matter
Right.
where you are, irrespective of your language, your wealth, your education, your socioeconomic level, anywhere you are in history, humans are humans are humans.
Yes.
So when I realized that, and I learned that from studying children behavior, I have just a big affinity towards psychology, right? My whole goal in life is to learn.
Yeah.
And the way we do that, like cell phones, is you upgrade the user.
Right.
So, you right?
Yes.
And look at children, right? How do children learn? And they upgrade their user. I'm in second grade, I'm in third grade, sixth grade, eighth grade, ninth grade, whatever it is, right? And every
Hmm.
year you upgrade and you grow and learn.
Yes.
I said, okay, great. So then I said, let me just go back to the very beginning. Let's forget everything I just learned over the last several years. Let me
Hmm.
unlearn everything. So I used to fly up to DC and go to the Library of Congress and read books about stocks that literally are not in print. This is before Google and it was really a thing and AI wasn't even around.
Yep.
So I said, all right, let me go read.
Hmm.
And I do that several times. And I started really learning a lot about behavior and cycles.
Hmm.
And then I was at the point where I was like, all right, enter the beginning of psychological analysis, but I didn't have it formulated in my mind yet. I
Okay.
said, all right, if you can go out and strip out all the noise, forget if it's NVIDIA, if it's AI, if it's .com, if it's real estate, or whatever the hot tulips from hundreds of years ago, the
Yep.
tulips, cycle. So whatever that hot item is du jour, investors are humans. Okay, even quantitative folks today that are systematic traders, it's all based on human behavior, right?
Yes.
Okay, so if, this is the long story of how I got to where I was today, or where I am today. I said, all right, if we're all doing the same thing, we're all looking at the exact same data, publicly traded information. I'm not talking about any insider stuff, all
Right.
legal, publicly traded data. Why are some people consistently crushing it and blowing away, performance decade after decade, and
Yes.
most people are not? They've
Yes.
got to be doing something different.
Absolutely.
So believe you me, I want to figure that out, right? There's
Yes.
the curious mind again. So I said, all right, I set up the money management business. I did that for many years, but I really started to shine. People would ask me my opinions with publishing my thoughts on stocks and on the stock market. So I've got newsletters. My main one is findleadingstocks.com, where I
Hmm.
share my thoughts about the market because it's much more efficient for me just to write a report and then 1,000 people can read it instead of me writing back to 100 or 1,000 emails, right?
Right.
So I started doing that. And then fast forward several years, I started to understand as I'm speaking to clients and speaking to money managers and speaking to professionals, people are people are people, right? So I said, all right, hold on a second here. I'm getting a little bit deeper, but I'm not quite there yet. Like kind of shining the light, but you don't figure out. So I did the
Hmm.
money management thing, but it wasn't really for me. So I exited that business. In 2018, I did two things. I finally came up with the understanding, the formula, if you will, or
Yeah.
formulaic approach to the idea of investing from my standpoint is teaching people how to take out their emotions or remove the emotions from the decision-making process.
Hmm.
Learn how to make rational, not emotional decisions with your money. Then all of a sudden, the penny dropped and things just, for me, that J curve hit. I started the podcast. So I did two things after I exited the money management business. I wrote the book, which was number one on Amazon every day for 3 months, which I'm very happy about.
Congrats.
And then the
Yeah.
second, thank you. And the second thing was start the podcast, which is called Smart Money Circle. So because my name is Adam, people would ask me early on, why should I work with you? I don't know you from Adam. I said, all right, in the early 2000s, I had to overcome that objection. I started getting in the media. So I've been on all the major financial media, Bloomberg, CNBC, Fox Business, Reuters, the whole nine yards. And
Okay.
then years ago, Forbes reached out to me and said, hey, would you like to become a contributor? I said, sure. And now I'm a contributor to Forbes with millions of readers there, and same with Zero Hedge. So doing the show, I would have access to big money managers and CEOs of publicly traded companies because of my time with Forbes and Zero
Hmm.
Hedge and all the other things I'm doing in the media and Bloomberg and Barron's and IBD and all this other stuff. And I realized I'd have good conversations with folks, but I'd hang up the phone and lose the magic. I'd write an article, it's not the same. So in 18, I said, all right, let me just do a podcast. And then 2020, COVID hit, Zoom became a thing, which we're doing now on Zoom.
Right.
And I switched it over to do an actual show, which isn't just a podcast. And now I've interviewed hundreds and hundreds of people, over $1 trillion in assets under management. I've been
It's
on the show
amazing.
so
Yeah.
far, and so many people. So that's kind of, I'm in that living is giving phase of my life now. I started a foundation called Happy Face Project where we teach people life skills they don't learn in the classroom. And
Yes.
now it's just a matter of just learning and sharing and having fun.
Uh, and we're going to come back to that towards the end. But thank you, Adam, because there's so much there. Hold on, let me see if there's a couple things I wanted to comment on before we move on. One is it's so interesting because you and I have a different background in finance, but yet I found the same thing. I spent almost 2 decades traveling the Northeast, presenting to individuals around the economy and the markets, and the same questions would come up in almost every single meeting. There may be a different flavor based on what was going on, but the same concerns, the same objections, the same emotions. And so I think it's fascinating. We both observed that. I would also comment on, I love the fact that you started so young because I do believe that because investing is so emotional, we all make mistakes at some point. And I always comment, I'd rather make the mistake early on than when you're well into retirement and you're working with a lot larger of a number, hopefully. And when you make that mistake, it's a much larger one. And last night at our client events, someone came up to me and said, hey, I have a 13-year-old granddaughter. I was thinking of gifting her stocks. Is it too early? And I said, no, absolutely not. Give her the experience. So thank you for sharing that. So I have a whole list of questions here, but before we do, you and I have both talked about already on the podcast the fundamental and the technical analysis. And there may be some listeners that aren't as familiar with the basic economic terminology. Can you just quickly highlight the two and why we're sort of challenging that it's not just the education of the two?
Yeah, absolutely. So fundamental analysis is when you study the company. All things being equal, you want to find great companies that are able to grow their revenue, grow their earnings, do it in at an affordable rate. They have positive cash flow,
Mhm.
things of that nature. And you can Google or AI it now. I don't even know what the term is for AI. Maybe AI it or Google it, who knows? But
Yeah.
ChatGPT it or whatever AI tool you want to go with deeper analysis.
Hmm.
But put simply, it's to get great, invest in great companies. It's Warren Buffett 101. He
Yeah.
owns American Express, Coke, companies that he knows are going to grow over time. They have a moat around their business. They offer value to their customers, and they're going
Yeah.
to continue to do so, irrespective of the political party or the headline, the recession, expansion, or trade wars, or schmariffs, tariffs, whatever it is. It doesn't
Hmm.
matter. It's all noise. Will the company be bigger in 10 years, 20 years, 30 years, 40, 50, 60, so on and so forth? And
Right.
you want to do it at a reasonable price. There's something called GARP, growth at a reasonable price. You don't want to just pay any price for the company. You want to make sure you do it within reason. So you're
Yeah.
not overpaying for the company. So
Yeah.
that's one side of it. There's lots of nuances there. And I've noticed, actually, in the book, I talk about value, like beauty, is in the eye of the beholder.
Hmm.
You know, you can look at something and be like, wow, that's the prettiest thing in the world, or that's so cute, right?
Mhm.
And you can
Yep.
look at someone else could look at the exact same thing and be like, yeah, not so much,
Yep.
or be repulsed by it.
Yeah.
And we get that in all aspects of life. You could see it from different interpretations of religion, or different interpretations
Mhm.
of stocks, or
Mhm.
companies, or value, or beauty, or so on and so forth. And that's the beauty of life, is that there's
Yes.
an, I say it also, there's an infinite number of ways to make money in the market. Your job is to find one that works for you. And
Yep.
that's the key.
I love
So
it.
that's the fundamental side. The technical side is to remove the company from the equation to a large extent and pretty much focus on the stock, how
Hmm.
the stock behaves. Notice the
Yeah.
language, behavior. Now, I'll get to the emotional side too, if that's okay, because I'd like to address that as well.
Yeah,
But
please.
the behavior of the stock could be completely different than the fundamentals of the company. So you
Hmm.
could see a stock be in favor and have a huge run. It could double, triple, quadruple, like
Hmm.
what was happening in the dot-com days for no reason,
For
except
no
for the fact
reason.
that it's in vogue. Yeah,
Yeah.
or it's, quantum computing is really hot now, or
Yes.
AI, or drone stocks, or whatever. And you see these stocks, they don't have any revenue or very little revenue, but they double, triple, quadruple. And you're like,
Hmm.
what is going on? No Sales Biotechs did that for a long time in
Yes.
2014. 15. So we see again, it's repetitive behavior. The
Hmm.
names might change, the industry group might change, or the sector might change, but the
Yeah.
behavior of humans is the same over and over again. So that's more or less the technical analysis. And then there's patterns, right? If you study success, Tony Robbins says this, Jim Rohn, his mentor, his teacher said it, success leaves clues. I mean,
Yes.
you model success. So if somebody who's really in shape, I guarantee you, and I don't even know this person, it doesn't matter who they are, they're going to eat differently than somebody who's not in shape.
Yeah.
Guaranteed.
Yes.
Why? Because success leaves clues. So if you follow those clues, that doesn't mean if you do what that successful person is doing, you're going to be successful also. It just helps increase the probability that you're
Sure.
going to be successful. And
Yeah.
that's massive. So
It's,
that's the, yep, go ahead.
oh, no, no, go ahead. Keep going.
I was gonna say that's the technical stuff where it's
Yeah.
different than the company, it's the stock. So you could look at price, you look at volume, you look at other metrics like moving averages, and you really want to dive in deep and really understand yourself. It's all about probability. Nobody knows what's going to happen in the future. It's literally unknown by definition in life, not just in markets. Where's the market going to be next week? Where's the market going to close today? I have no
Right.
idea. Guess
Absolutely.
what? You don't need to know. That's the beauty of it.
Yeah.
When you understand risk,
Hmm.
and when you understand reward.
Right.
So every element of life involves risk. If you wake up in the morning, there's risk. You go to bed at night, there's risk.
Hmm.
Risk comes in all different shapes and sizes. I think I have like over 20, 30 different ways of measuring risk or
Yep.
defining risk in the book because the risk of you literally not getting out of bed and doing anything,
Yeah.
it's there in itself is a risk. There's the
Yeah.
opportunity cost. You're missing this opportunity. You're missing that opportunity. There's infinite amount of risks, right?
Yeah.
So, all right, how do you live in a world, humans like certainty? By definition, the future is uncertain. How do you
Right.
live in a world like that? But not only that, invest your money which you're emotionally attached to. And here's the emotions part that I bring into the mix, which sprinkle this into fundamental and into technical. It's not mutually exclusive, it's both.
Yeah.
That, okay, great. The emotions, people are emotionally attached to their money. So if you're making decisions that are inherently risky, number one, number two, uncertain, there's a tremendous amount of uncertainty there. How do you do that and remain objective?
Mm.
You know the head emoji on the iPhone where the little head explodes kind of a thing?
Absolutely. Yeah.
Yeah, so that was when the light bulb went off in my mind. I was like, okay. So actually, you'll appreciate this. In the book, I literally have cartoons. This is the only investment book that I know of that has cartoons in it. And the idea is that we all have a smart money superhero inside of us, and then
Yeah.
what I call a dumb money beast. And the smart money superhero is this guy here. He's the one with the cape, and he's the one, making calm, cool, collected decisions. Or women, she's the one with the cape. It's not, it doesn't matter. The artist in the just made it after me, but it applies to women as well. And then the dumb money beast is like a Tasmanian devil character that runs around, throws their money into the market, makes emotional, not rational decisions. Now, people say all the time, hey, Adam, think of it this way before I go there. We have a good side, a bad side, an emotional side, a rational side. However you want to word it, smart money, dumb money, it doesn't matter to me. It's the spirit of the law, not the letter of the law, but have it internalize it so it works for you.
Hmm.
Okay, great. If indeed we have emotional, we're making emotional decisions, how do we make rational ones, right? Well, the first step is like in any kind of situation is understand
Hmm.
that you have a problem. Not so much a bad problem. Problems can be good. So understand, like risk, there's good risk, like debt, there's good debt, there's bad debt, right? So,
Absolutely.
okay, credit card debt is bad debt, mortgage might be good debt, depending on how people define it and so on and so forth. So there's good and bad inherently in everything. It's yin yang, it's the world, right?
Of course.
Yeah. So
Yeah.
let's talk about the decision-making process. So that when you recognize you're making emotional decisions, most likely you are money managers, professional ones, or individual investors. It's the very same thing because we're making decisions and we're human. The
Hmm.
question now becomes, if I'm making emotional ones, what's better to make emotional decisions or logical or irrational ones? Well, somebody might say, I'm really good. I'm going to make emotional decisions. Okay, let's take that and just really exaggerate it. Because if we exaggerate that, let's take money out of it for a second, talk about
Hmm.
a husband and wife in a
Hmm.
classic scenario. And the husband goes bonkers, he just goes crazy and is just making highly emotional, yelling, screaming, throwing things, is just lost his mind. Who's a better husband to be around? That crazy guy or the guy who's calm, cool, collected? Who's going to make better decisions? Or the wife? She goes bonkers, hysterical, enter any reason you want, it's irrelevant. Or the wife who's calm, cool, collected? Highly emotional, human,
Yeah.
or the calm, cool, collected? Which one do you think is going to make better decisions?
Hmm.
The rational one, right?
I would hope
Okay,
so.
yeah, I hope so. So if that's the case, then let's ask ourselves when we're investing or making any decision, this applies to everything, it's universal.
Yeah.
Okay, great. I want to learn how to make rational decisions. So just because an event occurs doesn't mean I have to react to it.
Hmm.
So I can't control what happens to me in life, but I can control how I react to it.
Exactly.
That set me free. Once I realize that I'm in control of my reaction to said event, I get stopped out of a stock, the market goes up, the market goes down, I get hit by a truck, God forbid, whatever the case is, it doesn't matter. I like to exaggerate just to illustrate the points. Okay, great. Let's take that emotional stuff. If I can control how I react to things, and I know that I'm making highly emotional, crazy, hysterical decision making is not good,
Hmm.
okay, then some level of emotional decision making still is not ideal. How do I get away from that event that occurred or the decision that I have to make and
Yes.
do it in a rational space? So I can do it by either thinking ahead and planning, anticipating. So if the stock XYZ goes above 100, let's say it's at 97, I'm going to buy it. Or it goes down to 92, I'm going to buy it. Again, I don't care about this specific the mechanism, it's up to
Hmm.
you. But the idea is that it's thought out in advance before the event occurs.
Correct.
Now,
Yes.
all of a sudden, there's a plan. The plan could be dead wrong. That's irrelevant. There's a
Hmm.
plan. Over time, it's not about one trade, it's about 1,000 trades or a million trades or about 10 years of those decisions. Over
Hmm.
time, will that yield a positive result for you and the highest ROI possible? And if the answer is yes, then let's plan ahead. Not only where am I going to enter, but where am I going to exit if I'm wrong? And I'm going to be
Correct.
wrong a lot. And
Yeah.
that's okay as long as my risk is small. So another big piece of the book, remember earlier I said risk and reward, right? So the three most important questions I ask before I buy anything, not just stocks, but any investment, is where am I going to enter?
Hmm.
Where am I going to exit? And how much do I risk if I'm wrong? If
Okay.
I'm okay with those three things, I'm good.
It is a calculation from the beginning so that you don't allow your emotions to get in the way, right? And
100%.
you kind of through that comment, as you were talking about emotions, you mentioned tariffs, and I can't help but comment that, since we're sitting here in 2025 and we've had so much volatility, in January, February, March, and then April was a whiplash, and then it came back. And a lot of that was driven by tariff concerns. And to your point, it wasn't the fundamentals of the company. It wasn't like Amazon changed overnight, but it was the emotions sort of coming in. And we see this all the time in when you invest. So I guess can you talk a little bit, Adam, about what when you see these emotions and you see how it can derail a long-term plan? Do you have any examples or stories that you can share? Because one of the things I struggle with is explaining how easy it can happen and so quickly, right? It's almost like the individual has no idea that they're emotionally going through it until after they've triggered and made the decision. Is that fair to say?
You're spot on. You're right on the money. Home run, hats off to you type of a thing. Yeah. I mean, here's what the reality of the situation. We just got Q1 results from most of the companies, right? So, okay, in Q1, most of these companies did pretty well if you look at their earnings,
Hmm.
right? You
Yeah.
don't see any of them saying, "Hey, listen, we lost a truckload of money. It was the worst quarter ever," so on and so. Some maybe a handful, but for the
Hmm.
most part, they emerged out of Q1 of 2025 pretty strong and pretty good shape too.
Yeah.
And most did not raise prices. In fact, it was a very minimal impact, if any. So 100%, you're right on the money. It was all emotions. If
Hmm.
it wasn't fundamentals, what was it? It has to be emotions. People
Yes.
overreacted. Now then you ask yourself, have I ever overreacted to something? Yeah. If you're a human, the answer is absolutely.
Absolutely.
Yeah.
The
So,
professionals do
okay,
it too.
we all do. So
Yeah.
again, you were humans first, everything else second. So when
Yeah.
you look at it from that lens, here's the deeper answer to your question. So there's something called cognitive biases.
Yes.
This is a fancy word. You can Google it. It's really simple. It means if you have a mind, which we all do, that
Hmm.
means you have biases. Biases are just a fancy way of impacting your decisions, right? You don't see things clearly. You see them the way you want to see them based on your biases. Okay.
Yes.
So Adam, what does that mean? Here's an example that just about everybody on the planet can relate to. You ask 100 newlyweds the night of their wedding, raise your hand if you think you're going to get divorced. I almost guarantee you, nobody, I see you smiling, no one's going to raise their hands.
Hmm.
Statistically, we know half of them are getting divorced.
Yeah.
So riddle me that, Batman type of a thing, right? So if no one thinks it's going to happen to them, so that's called a personal blind spot bias,
Yes.
right? Oh, I'm not going to get hit by a truck. I'm not going to get XYZ. I'm not going to get. We both speak to investors all the time. You know how many years, even till today, it's still ongoing. I go speak to groups of investors. Raise your hand if you think you're going to beat the market. Everybody raises their hand. We know most of them are not going to beat the market, but I'm different, right? So
Hmm.
the cognitive biases, understanding how you make decisions is absolutely game changing. That's
Yes.
one.
Yes.
Two, understand that this time is not different is another game changer.
The media
Yeah, the
always
headline is
pretends like it is.
exactly. That's
Yeah.
how they sell. That's
Yes.
their incentives. So they want you to think it's different, and it's
Hmm.
not malicious. It's their own self-interest because if it's the same thing, you're not going to read the paper, click on the click or what people aren't going to make money. There's no media.
Yeah.
So, okay, if the headline is by the way, the headlines are different, no question, right? The tulip bubble, the dot-com bubble, the
Sure.
AI bubble, whatever, the Bitcoin, whatever it is. I don't care about the headline. What I'm caring about is the underlying decision-making process that drives everything else. If you
Yeah.
go back, Elon Musk has the first principles thinking where you just basically like they teach our kids to reduce the fractions to the lowest common denominator. Same
Yeah.
thing. If you can just reduce everything to what's the most important thing, okay, it's how we make decisions. What
Yes.
determines success from unsuccessful people? It's what you do. What's the
Hmm.
difference between me today and me 5 years from now? The results could be completely different based on one thing and one thing only. It's the quality of my decisions. What do I
Hmm.
do? So, all right, if I know that I have a mind and I know that I'm emotional, I'm human, so I have emotions. Okay, even if I control my emotions, I'm very stoic and very composed, and it doesn't matter. We still have an element, even if it's 0.001%
Hmm.
of emotion sprinkled in. Guess what? If there was poison and I sprinkle in 0.001% into your food, would you eat it?
Hope not.
No way. Absolutely not. So if there's something that can impede or hurt my ability to make rational decisions, it behooves me to go out there and say, okay, how do I do this better?
Right.
Then you enter in what I call mental walls. You ever do something and then hit a wall? Of course, we
Of
all have,
course.
right?
Yeah.
Yeah. So I call these mental walls. Once we understand we're creatures of habit, we have good habits or bad habits, L habits or W habits. That's how the kids talk these days.
Hmm.
Okay, great. So winning habits, losing habits, that's all it means. And once you understand you're highly emotional or just have some element of emotions, even if it's a small amount of emotions, but you're making emotional, not rational decisions,
Hmm.
you have a choice. Do I keep doing this expecting different results, Einstein's definition of insanity, or am I
Yeah.
going to figure out something else, change? And
Hmm.
that's where, people, all the best athletes in the world have coaching programs. You want to get in touch, you can go on findleadingstocks.com or Smart
Right.
Money Circle and reach out. My whole life's mission is helping people make better, rational decisions. And the good news is it's doable.
Yeah.
Just about anybody can do it. Once you just break free of those patterns and the old limiting beliefs that we were taught, oh, I have to react to my surroundings. I'm not in control of my reaction,
Yes.
so on and so forth. You just break those stories down that no longer serve you and you replace them with empowering beliefs.
Yeah.
Wow, can lives change? I mean, absolutely lives change.
Well, and it's interesting because, and I love those comments. Thank you. I say this all the time from a financial advisor's perspective. I think a lot of our role is psychological, and
Yeah,
we have to help our clients control the emotions because we can't, if we're emotional, we can't just turn it off. And so I say that all the time. If you're emotional, share it with me. Just know that I might not agree with what you are trying to do with your portfolio. And just know that that may not be in your best interest. And as a fiduciary, it's our responsibility to keep guiding you past the emotion, if that's fair. If
yeah.
we know we're emotional, how do we control it when it comes from an investing perspective? Do you have
That's a
any
great Yeah,
tips?
yeah, okay. So, by the way, you're doing your job, which is literally why they hired you, for you to be an objective sounding board. Let them give you their emotionals, let
Hmm.
them share with you as much as humanly possible. But it behooves you, because of your fiduciary responsibility, to step up and say, hey, this is what I believe. You make the decision, ultimately, client, because it's your money and you do what you want.
Right.
But it's my opinion that we do X. Whether you listen to me or not, it's up to you. Most
Hmm.
people are going to make their own decisions because they feel they know it better than everybody else, even the professionals they hire to help them, but that's beside the point. So, all right, it starts with your question is, how do you make rational, not emotional decisions with your money? First off, is find somebody who gets it like you. I'd recommend everybody listening to pick up the phone and call you and ask about your money management services, because you're doing a really, really good job and you get it.
Hmm.
That's one. I'm not affiliated with you. This is
Yeah.
just an
Yeah. Thank you,
unbiased.
by the way.
I sincerely mean that.
Yeah. Thank
Two,
you.
find somebody who's intelligent who understands and gets it, and call them and
Mhm.
actually share with them. Go deep and really share with them. Be vulnerable. Allow yourself to be vulnerable. Really go down into your emotions and find out there's two things. Humans are structured or created to seek pleasure and avoid pain, right?
Hmm.
Find out where that pain is and dig deep. Go down and
Dig
dig
deep. Yeah.
and share that pain. What's the worst case scenario? What are
Hmm.
you scared of? Run out of money in retirement? You scared of going broke? You're scared of what? And look, we're all human. We all have these fears.
Yes.
Share them.
Yep.
Once you get them out there and you lead with that, now all of a sudden nothing can happen. Like Elton John song, I'm still standing, yeah, 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 or
Yep.
Tarzan pounding his chest kind of a thing. Now you've put it out there. You're really intellectually honest with yourself, which is the most important thing, and then with a trusted resource, which is the advisor.
It,
Now, all of a sudden, yep, go ahead.
oh, sorry. I was just going to say really quickly. And tell me if you've seen this in your experience, where a lot of individuals don't even realize they have that fear because a lot of
100%.
that fear is embedded from some type of early childhood experience. Maybe it was the way they were grown up. It was the conversations they had. Who knows?
100%. And I've noticed, this is a gender show too. I've noticed it happens a lot more with men than women, right? Because men are
Interesting.
taught to suppress and repress their emotions. I'm not
Hmm.
a man, I'm a boy. Let's say a boy cries. Stop crying, be a man. What does that mean? Men can't cry. You're not allowed to share your
Yeah.
emotions. We have emotions. What are we supposed to do with them? Just bottle them up and explode? No. You want to get them out. You want to share them in a
Right.
healthy environment where it's controlled, so you don't bottle up and explode and all that kind of stuff, which unfortunately most people don't have that outlet. So once you understand it's safe to share those emotions, and again, it goes back to the limiting beliefs.
Right.
And then
Or can I also throw in, Adam, that women were taught not to talk about it?
and that too,
Slightly different
absolutely.
emotion than maybe how men were raised, but either way, it suppresses them from acknowledging maybe some of the fear.
Absolutely.
Okay.
Now, when you understand, man or woman or whatever you want to believe in, that humans, I'm going to just give a blanket statement. And again, this is general. Take the good out of this conversation, leave whatever doesn't apply to you. But
Hmm.
when you understand there's always room for improvement, you upgrade the user. You could like cell phones, like Apple's on Apple 16, Apple 17's coming out, the iPhone, and every few months a Tesla, you get an upgrade to the software. Microsoft upgrades the software. What are they doing all that for? They could just stop. No, that's not how humans work. It's evolution. It's constantly evolving. The universe is constantly growing and evolving. Humans are constantly growing. Consciousness is constantly growing and evolving. All this stuff is constantly growing and evolving. So us as humans, we
Yes.
want to consciously grow and evolve as well. So again, find that safe person, realize that you're human, realize you're making emotions, write them down. Magic happens when you write things down,
Yes.
what those fears are, what those limiting beliefs are, and then ask yourself, do you want to carry this limiting belief around any further? It's a piece of
Mm,
luggage that's heavy. Or do you want to drop it and replace it with something that can empower you? Think of a headwind versus a tailwind, right? A
mhm,
tailwind pushes you forward, a headwind slows you down and stops you. So, what are those limiting beliefs that you're not even aware of, most likely, but we go deep into them?
mm,
And then, how do I convert them to empowering beliefs? That's big. Two, find somebody you can trust, share with them. Even therapy is very helpful and very, very, very powerful,
mhm,
especially when you understand that life is all about relationships.
mhm.
So one in Harvard, they have this study about happiness. What makes people happy, right? Everybody wants to be happy. I want to be happy, happy, happy. Well, all right, few things I've learned about happiness. A, the journey is the destination,
Yes.
meaning
Yes.
I'm not going to be happy when I become a billionaire, a millionaire, or I lose the 10 pounds or whatever that future goal is. Then you're constantly chasing something that never's there. No, when I do that 10 sit-ups or I eat healthy or I save more money or I make more money or whatever that journey, if I can reassociate happiness from some future destination that's just beyond the tips of my fingers that I can't quite touch to right
Hmm.
here, right now,
Hmm.
wow,
Yes.
that's one. Two, I had a really interesting CEO of a big publicly traded company on, and he does life insurance, but he talks to a lot of people with life insurance. He buys their policies, goes into all this depth. But what did he tell me? He goes, Adam, when I talk to all these folks that are in the last quarter of their lives, looking back at their life, they don't care about missing a deal or being late to an appointment or running around being busy. What do they actually regret or what do they wish they would have done differently?
Yes.
Foster those relationships, right? Okay, great. So time is your most valuable asset. You can't buy more time. We all have 24 hours in a day.
Nope.
Buffett, Gates, me, you, everybody else, we're all the same. Okay, great. So how do you slow down time? Be present.
Be
The
present.
more focused you are on right here, notice even right now, it's slowed
Hmm.
down. The more present you are, the more powerful life is because your perception of time slows down. Time
Hmm.
slows down. And that's all that matters is your perception, right? So, okay, great. You can slow down time by being more present. It's not the future destination. Sure, have goals. I'm not saying don't set goals. Absolutely set goals, but enjoy the ride along the way and then set another goal and then enjoy the ride. Don't just wait to be happy when some external event occurs. The internal is what really matters. The
Hmm.
external is almost like a mirror to your internal. So then the next thing becomes that I've learned, it goes back to relationships, right? I had a big health guy on the show, and he does epigenetic health testing. So he tests your biological age versus your chronological age. I want to make sure I said that right. So, okay, let's say someone's 70 years old, they look like they're 50. Someone's 50, they look like
Hmm.
they're 80. What's the difference there? We've all seen these people, their biological age is different than their chronological age. Let's do
Right.
it that way. Okay. So, what makes your biological age different than your chronological age? All right, great. Well, it's what you do.
Hmm.
Right. So he goes,
What you
Adam, you
not
can do
do.
all. And then what you don't do, right? I'm not going to eat that cookie. I'm not going to go
Yeah.
blah, blah, blah. Okay, great. He goes, Adam, after you do the basics, eat healthy and move and be active and so stop sitting. Sitting is like the new smoking and all that kind of stuff. Okay,
Hmm.
great. After all of that, you know what really matters? What moves the needle? We've tested this with thousands or millions of patients, whatever it was. It's the quality of your relationships.
Amazing.
What? So go back to the Harvard thing. It's the head emoji all over again.
Yeah.
So then he goes, the quality of your relationships. And if you have better relationships, you have a better quality of life, and then your health is better and your biological age slows down. The
Hmm.
rate in which your body ages literally slows down due to the health and the quality of your relationships.
Yeah.
And then I'll take it a step further in my own studies. We have relationships with everything in life, including ourselves, our spouses, our children, our
Mhm.
creator, if you believe in God, or universe, whatever external thing, Mother Nature, if you want to use
Yep.
that word. And we have relationships with money.
Yes.
And when you understand that relationships can be binary, where there's good, bad, let's just do it for the sake of this conversation.
Hmm.
There's good relationships and there's bad relationships, healthy, unhealthy, whatever you want, smart money, dumb money, it doesn't matter to me, the labels. But okay, great. How do I have, first off, before I even ask that question, what is my relationship with money?
Hmm.
Is it healthy or unhealthy? Good, bad, limiting, empowering, whatever you want, right? Then the second question is, once I try to understand my relationship with money, it's kind of like the personal blind spot bias where it's hard to see, but
Yeah.
external people can see it easier. Ask your
Hmm.
loved ones, ask your circle of friends, ask people who know you because they can see you clearer and better than you can see yourself. It's
Yes.
like two people playing chess. A third person can see moves that those two people don't see.
Hmm.
Okay, great. The next thing is once you identify your relationship with money, you ask yourself the next one, how do I improve it?
Yeah.
And the same thing with my spouse, same thing with my kids, same thing with myself. I used to, again, Einstein's, think it was Einstein, because the universe can be a friendly place or an unfriendly place, right? So it's your choice. Oh, life happens for you, not to you, so on and so
Hmm.
forth. Once you understand that you can change your beliefs
Yes.
like that, you can change your relationships like that, it happens in a second. If I want to have an awful relationship with you right now, I can go ballistic, yell, scream, curse, click, see you later, you'll never publish the interview.
Hmm.
Or I can do my best to give value and be authentic and share my beliefs and hopefully help you and help others.
Hmm.
Okay, great. With what I've learned along the way, guess what? That's much more of a likelihood that the relationship improves, but it can be destroyed in a second. They say it
Hmm.
takes 1 second to go bankrupt, right? Everyone's like, I want to make more money, make more money. Guy makes 10 million and he spends 11 million. He's negative one. Lady makes 10 million, makes 100,000, she spends 25,000. Who's going to be better off in 10 years?
Yeah.
So, yeah, so it's a decisions, but you can ruin that relationship instantly, right?
It, it,
Yeah, go
oh, go
ahead.
ahead.
I was gonna say you can ruin it instantly, but you can also strengthen it instantly as well.
It-
And that's really powerful.
yeah. The happiness thing that you made a comment on, I think is incredibly powerful because again, as an advisor, when we talk to clients or people that we're meeting for the first time and we say, what are you looking for out of this relationship? What's important to you? I have very rarely ever heard, I want to retire with $1 million. I've never heard a number. It has
Yeah.
always been, I want to retire with confidence. I want to do X. I want my grandchildren to be. There is always something of value that is not monetary, which I think is absolutely amazing. And it just goes back to what you just commented on with the happiness. So I think with that, Adam, can we, before we wrap this up, can we talk about the Happy Face Project?
Yeah,
Because I know it's
absolutely.
near and dear to your heart, and I love it.
Thank you. So again, learning life, I got one job, but to learn. Go back to the beginning part of my story, right? Like think of the trunk of the tree. Everything I've done are branches that come back to that trunk. It's learning. And that allowed me to look at things differently. The universe can be a happy place. I didn't know that growing up. I had overcome a lot of adversity as a kid, so on and so forth. So, okay, great. If I can give back now, I spent my whole life and I'm going to continue to spend it probably unless if something drastically changes or which
Mhm.
I doubt, but I'll continue to spend the rest of my life learning because I genuinely love to learn and share what I learned with others because I
Yeah.
know one nugget of wisdom can really change people's lives.
Yeah.
So, all right, how do I do this and reach a lot of people? So I can do it online and I've got a good following online. Okay, great. But there's foundations, right? And I got to a point in my life where I can give back and help others. So I created a foundation. I said, why not set up a foundation that has one job and have other people come on board, join the mission, donate, help, provide content, so on and so forth. It's called Happy Face Project.
Mhm.
And the idea there is teach people critical life skills they don't learn in the classroom. Website is
Mhm.
happyfaceproject.org. And it's really been life changing to be able to go to somebody, even from a mentoring standpoint. I work with kids. I had an 18-year-old guy that I met So I used to sell cell phones at Circuit City before Circuit City went out back,
Wow.
25, 30 years ago. Yeah.
Yeah.
And I just moved to Boca at the time. This is late 90s, early 2000s. And I remember when they first opened the Circuit City on Glades Road, which is now at Barnes and Noble, and it was a big deal and blah, blah, blah. So I was selling cell phones for Sprint PCS, which way back when was something. And
Hmm.
I would always see successful people come in and out of Boca. And I'm like, man, and I was 19, 20 years old, somewhere in that time frame, and early 20s. And I always wish deep down somebody would just give me a shot. Like somebody would hire me. Nobody did. So fast forward 20 years or whatever it was. And I was in a position to help somebody else. And I was going somewhere and I had to buy a cell phone. And this kid was really sharp. And I go right, he go right, I go left, he go left, I go up, he goes up, I go down, he goes down. And this guy, and I could just see he's got that twinkle in his eye, that little sparkle. And I was like, man, what do you do? He's like, I'm a videographer on the side and blah, blah, blah. I'm like, how old are you? He's like, oh yeah, 18. He just turned 18
Mm.
and 19 or whatever it was. And I was like, okay, great. Listen, come work with me. How much you make a month? He told me. I was like, I'll pay more than that. Come work with me and let's go have some fun together. That was about 7, 8 years ago. I think he just turned 26 now. And the guy's life has fundamentally changed. That's one
Mm.
guy, but I've done this many times now. And the joy that I get out of seeing that guy grow
Hmm.
and
Yeah.
transform and the love that's been sent back in return is just
Yeah.
next level. To me, that's living is giving, right? That's true happiness. You get to like
Hmm.
Maslow's hierarchy of needs. You get to a certain point where that really makes me happy, right?
Yeah.
So, okay, great. If we can create programs, which is what we're in the process of doing now at Happy Face,
Okay.
where we want to help people learn these life skills that they don't learn in the classroom, financial literacy, emotional intelligence, everything we outlined here, happiness, the journey's a destination, and hundreds of more things, not hundreds, dozens of more things to be fair,
Hmm.
but hopefully it'll be hundreds at some point because this is going to grow, grow. Hopefully it'll grow, grow, grow. But the
Yeah.
idea there is teach people those life skills. Now, the classroom is still around, and there's nothing
Okay.
wrong with school. So we also give scholarships because we want to help people that can't afford to go to school be able to go to school. So
I
it's
love it.
we do too. Yeah, and that's kind of the idea.
Is there a certain targeted age, or is it of people of all ages, kids to adults,
All ages.
all ages?
The programs are available to anyone, like financial literacy, for example, how to balance a checkbook, emotional decisions versus rational decisions. That applies to everybody. Now, if a 5 year old is not going to really understand that level of depth, so
Right.
it's age appropriate, but
Yeah,
the topics are timeless.
I agree. Okay. Love it. Thank you, Adam. Any last comments from our topic today that we didn't really hit on that you were top of mind with?
The most important thing is the empowering, right?
Yeah,
If you're not happy with your results and or you want more, understand you can do it.
love it.
So powerful.
Hmm.
You can do
Yes.
it. And you might not know how to do it, and that's okay.
Yeah.
Learn. You got one job. Learn.
I hope that one of the messages people gather from this today, which I've tried to talk about endlessly in the past, is that you don't have to be the most sophisticated investor to be successful. I think a huge part of the element of being successful is understanding your emotions and just focusing on the basics.
Oh, I couldn't agree with you more.
Like
But I
that's
mean, look,
it.
yeah, if Buffett had a great line. So I like to read his annual reports, right? It's
Yeah.
just that's how it works. Most people don't, but it's you can learn something.
Hmm.
Okay, so I learned this guy's a great line. He goes, the American tailwind. What does that mean? Over the last 50, 60 years, stocks in the US, the economy in the United States have gone up more or less. There's been bear markets along the way,
Sure.
but more or less we've had a huge American tailwind. I call it the Great American Tailwind, and I cite my source saying
Yes.
it's coming from Buffett in the book.
Hmm.
Okay, great. If you know the American tailwind is there, and most likely it's going to be higher in 10, 20, 30, 40, 50, 60 years, 100 years, think of investing as an infinite game, not
Hmm.
like a finite game. The Knicks played the Pacers last night and they tied in the last minute, and then went to overtime, or the Celtics or Yankees, Mets, or whatever your team is, it doesn't matter. Okay, great. That's a finite game. There's a
Yeah.
certain number of players, there's a fixed time, there's a winner, there's a loser, there's a score, blah, blah, blah. That's not this world. Investing is an infinite game, and it's going to outlive all of us and outlive our children. So, okay, great. And their children, and their children, and their children. So, if you think from that point of view, you think 6 weeks, the market goes down 20% because of emotions, like you said, tariffs, schmariffs, whatever it was, and
Hmm.
that's going to derail all your investments for, you can, I see you smiling, you can completely miss the point. So, keep it real simple.
Yes.
Understand you have emotions that impact our decisions. We're humans. Understand fear is very powerful.
Hmm.
and it distorts our ability to make rational decisions. And when stocks go down, when people lose money,
Yes.
even on paper, fear goes up. It's an inverse correlation, fancy word there, which means
Mhm.
stocks go down, fear goes up. Real simple. And guess what? That's when you double down with the financial advisor who's got your back, who's got the emotional attachment, sorry, the ability to detach emotionally, but
Detached.
they have, yeah, to emotionally detach from the decisions.
Correct.
And that is extremely powerful.
Mm. Well, I also think going back to where we started, how much in assets have you interviewed now in Smart Money Circle?
Over $1 trillion.
$1 trillion. You have heard from so many professionals, successful individuals about their view and experience on investing, and yet you come on here today and we spent most of the time talking about controlling the emotions, right?
It's 101. It's
Yeah,
you like walk into a crowded theater, yell fire. You get the same reaction.
yeah.
I've studied every major economic cycle, boom, bust in markets and economies and so on and so forth. Because Ray Dalio says this, the biggest hedge fund manager in the world. He goes, it's another one of those.
Yes.
I've never, yeah, it's true. I didn't live during the flu 100 years ago with the first pandemic, or not the first, the most recent pandemic before COVID.
Hmm.
Because I wasn't alive back then, if I looked at COVID, I'd be like, oh, this is the first time it ever happened. I can't believe people are walking around with masks. The whole world shut down. Oh my God, oh my God, oh my God.
Hmm.
It's happened before. It happened just 100 years ago in the
Right.
history of the world. That's a very short amount of time. But because I've never experienced it, most people, they're limited by their own experience. So
Absolutely.
I'm going to believe this is the first time the market ever goes down because of emotions.
Yeah, absolutely.
No, it's another one of those.
It's another one of those. Adam, thank you so much for your contribution today. Appreciate it.
Thank you kindly and keep up the great work. I love what you're doing. And
Oh,
thank you
thank
kindly.
you.